Are your clients buying enough life insurance? Or does your system, your program, automatically reduce their protection and increase their costs inadvertently? Here are 6 ways you might be shortchanging your life insurance prospect. Check your system. Number 1, you use too low an income replacement percentage. 80% is very much a minimum these days, and using 100% allows for inflation adjustment in later years. 2, you allow them to protect too few years for their survivors. Planning for the minimum number of years exposes them to a maximum amount of problems as this goes on. 20 years is a prudent place to start the discussion for most people. Number 3, you use an overly optimistic interest rate to produce income. 5%, at least these days, is a maximum, and using 3% can prevent encroachment on capital and provide room for emergencies in the future. Number 4, you underestimate final costs. Funeral and burial is not $15,000. Medical expenses prior to death are a real thing and need to be accounted for. Professional fees do happen, and they are added. And mortgage prepayment costs money. So add 5% to their balance, and you are sure to have it all paid off neatly. Number 5, you deduct existing assets from insurance amounts possibly required at overly optimistic values. Sometimes we don't even think about this. But fire sales after funerals means for low prices. It's actually much better to exclude most of those assets anyway. Number 6, you don't suggest alternate payment period options for term insurance. You see, wanting 30-year coverage means that a permanent policy, even a non-par whole life, a T100 in a UL contract, means a permanent policy can reduce total money out of pocket to just about zero. So, check your thinking and the program on your computer that you use, and stop shortchanging your clients. They deserve the best programs they can get. God bless, and I'll see you again next week.